Hi, it's Adam Hewison. I'm coming to you from the digital studios of MarketClub, and the market we're looking at today is the S&P 500. We've looked at this market before on several occasions on a buy and hold series, which was my previous video, which I hope you had a chance to look at. And today what we're looking at is the symbol is INX, by the way, on MarketClub, but we're looking at the highs that were made on October 11th at 1576 and the subsequent fall in this market, and of course this year's rather sharp rally. So where are we going to go with this market? That's the key thing. Well, certainly the trend has to be considered positive right now, but is it going to continue? There are two forces out there that are coming to a confluence in the road, so to speak, that I think can present some serious problems for this market. And I want to share those with you today. So let's take everything off the screen. The first thing I want to do is put a trend line in this market. It's very easy to do with MarketClub. So I'm going to the highest point right here, and I'm going to simply pull this across, stretch it all the way across to our present day, and just let go. Very, very easy to do with MarketClub. I'm then going to go to our Fibonacci tool, which you've seen me use before. I'm going to go to our Fibonacci tool right here and click it here and then drag it up to the high point that we see right here. So okay, so what you can see is we're getting very close to this 50% area, not only the trend line but also this retracement level. I think this is going to affect the S&P market in a rather major way. I don't think we're just going to break through here and keep going up. I don't think that's going to be the case at all. I think we're either going to slow down and see some consolidation, maybe like this, or we're going to see this market turn back down. Now, we're also coming to a very important date that's coming up, and that's going to be October 11th of 2009. That's going to be approximately 2 years after the highs were made right here. People are going to be looking at this date, and certainly October has proven to be a very, very cruel month for the stock market. So I'm thinking you've got the downtrend line here. You have a major Fibonacci number coming in right around 1122 on a close-only basis. And it seems to me that we've had a pretty strong recovery on really not much other than government stimulus. I think probably they're running out of money to stimulate the economy anymore. And with unemployment continuing to rise, I just read today in record numbers in California, it looks to me like that we're going to see a stall out in this market. So that's what we're seeing. This is what to watch. This is the big thing to watch right here, is the trend line and the Fibonacci numbers. Those two major technical indicators may cause this market to have serious problems in the very, very near future. Remember this date, October 11th, because that's going to be a date that a lot of people are talking about next month. Also, we're still in a secular bear market. If you scope everything off, we'll take everything off the screen again, and we'll scope this out even further. In fact, let's just go to the max, and you can see quite clearly that this low here is lower than these lows here. So this is obviously a very important lows set back in the 202 period, and now we've taken them out, and this is a recovery which could very seriously just go like this as well. So I think you want to be very, very careful about getting overly optimistic on U.S. stocks, especially when we're coming to this important zone. Hey, this is Adam Hewison. I just wanted to share with you my thoughts on the S&P. We're going to, of course, rely on our trade triangles for timing, but this is something to pay close attention to in the month of October. Every success in the marketplace.